Hi, I'm Nicole Wallace, and today I'm joined by Vanessa Brown, who is our Director of Nonprofit, and Kristen Smith, who's one of our exceptional controllers in nonprofit. And we wanted to take a minute to just talk through some of the issues that we're seeing arise in that space. Nonprofit accounting is nuanced. It's different than for-profit accounting, and these two know better than anyone some of the issues that can arise, and candidly, some of the pitfalls to look out for. So, taking advantage of their expertise, or just going to talk through a few of the those specific nuances, particularly around the balance sheet. And I know Vanessa, in your experience, one of the issues that arises quite a bit is donor restrictions on contributions. Can you talk a little more about that?
Yes, definitely. So this is one of the things that we do run into from time to time with our nonprofits is surrounding donor restrictions. And so balancing the dual needs for wanting to receive donations, obviously, and being grateful and thankful for them, but at the same time, trying to have those donations be something that can actually be managed that aren't so restrictive that they can't contribute to the mission of the nonprofit and they can't help the nonprofit organization kind of strive towards its mission and that kind of thing. So there are situations, unfortunately, where you'll get really very restrictive donations or people approaching you to make a donation, but it's excessively restrictive, that kind of thing.
What are some of the
We
things that
found
you and Kristen have done to account for those kinds of restrictions?
We've had a nonprofit that actually developed an internal policy surrounding restricted donations. And so that was really helpful because then they could kind of go back to the donor and sort of have that conversation that we're really grateful for your donation. We would love to have these funds come into our organization to really help us achieve our
Mhm.
mission. However, it's also got to be something that we can realistically manage. And so they kind of developed a policy, and then they could sort of share that policy with the donor and say, well, here's our policy for restricted donations. So this is sort of what we've ascertained, and our board has looked at this, and our entire organization has determined that when we want to accept a restricted donation, it kind of needs to be in this format in order for it to be meaningful and beneficial for our organization. And so it's a really great tool because nonprofits can give that to a donor and it kind of starts that conversation. And it's a tough, it can be a tough conversation because on the one hand you're really grateful and you obviously want to
Mhm.
accept the money, but on the other hand it's also got to be realistic and beneficial, right, for the organization. You can't just have money sitting on your balance sheet in perpetuity that can never be used because the restrictions are too restrictive.
And I assume that some donors can get pretty creative about those restrictions.
Absolutely, yes. I had a nonprofit that had gotten a donor letter, and it was 3 pages long, and it was almost like doing Twister. Really, would be the kind of the the analogy for it was like, I don't know if we're ever going to hit these metrics to actually be able to have these funds, employed in the mission. So, Kristen, you've probably run into these things too, I'm sure.
Absolutely. The good thing about working with not for profits is a lot of the donors are pretty flexible. So if you work with the donors in honesty, then you can work within those parameters to kind of fine tune those requests of how the restrictions are in place. And in addition, sometimes you're working with donors who there's not that flexibility. You can't put something into place that makes it easier for the organization to use. But what you can do is work with the not-for-profit organization to find ways that work for them to organize the fund on their balance sheet so it's clear and concise and is used appropriately.
And I assume when the 990 comes around, these things have to be segregated in some way.
They absolutely do. It has to be into a restricted fund. It has to be obvious to, on your return that those are not in your actual profit and loss statement or your statement of activity for not-for-profits. It has to be segregated.
Mhm. And what would happen if you didn't?
Well, a lot of things. One, there could be legal consequences, and unfortunately, we have seen that. We've seen clients come to us with funds that have gotten mismanaged and commingled, and then you've got a problem to clean it up. And of course, then you have an onus of responsibility to be honest with your donors. And you can mitigate those damages as much as possible, but you could lose your charter. And even if you don't lose your charter, you lose your reputation with potential other donors. So it's very hard to recover from mismanagement of restricted funds.
Wow. And there's an audit, right? Those is mandatory.
Well, it depends. If you've hit the threshold, there is a threshold of where you do then have a mandatory obligation of having an audit before you file your 990. But in addition to that, there's a lot of different larger donations, especially that you don't qualify for without audited financials. So if you're working with a not-for-profit and you're trying to get them to that point where they can go after a bigger donation, it does behoove them to keep their financials in very good order and be audit compliant.
Got it. Vanessa, anything else on the audits or some of the things that can come about when you're going into taking that accounting and presenting it either for audit or tax or both?
There's also issues where nonprofits will go for grant funding from government agencies. And these could be local agencies, state, federal, depending on the type of funding that they're getting and their mission, right? If they're delivering health and human services, let's say, and funding is coming from Medicare, it could be directly from federal Medicare, but in many instances, the federal funds are distributed to the states, and then the states are responsible for distributing that out to various nonprofits. So anyway, all of these things can lead to other audits, right? So audits from any of these government agencies. And oftentimes the grants are very open as far as when they can come in and audit. And sometimes it's random. It could be every 3 years, or they could just suddenly go, well, you're on a different cycle and now we're coming in annually for a while or something like that. Or if there's a finding from a prior audit, then that could then, instead of putting you on a 3-year cycle, now you're on a 1-year cycle until they get comfortable knowing that you've got your books under control and things are in compliance and you're running things according to the terms of the grant. So yeah.
And we've seen some clients that have come in with some pretty messy books, for lack of a better, they obviously have important responsibilities and are often running very lean and really need someone that can pull all of that together. And it's really important that they know some of the implications of not doing that. And I know, Kristen, you've seen some of that, right? You've seen on the front end clients coming in with some pretty big messes.
Indeed, I have several of those we've been able to mitigate and get them cleaned up and run with the ball and actually make some great strides towards further donations. But unfortunately, I have had a client that we ended up having to shut them down because they weren't in compliance and their audit was not passable. So in general, we can help mitigate some pretty big problems, but we certainly want to catch that as early as possible.
Yeah, and that was out of our control. It really does highlight the importance of having your books in order. Any other examples or anything else along the lines of donor restrictions or contributions?
I was going to kind of add to what you and Kristen were talking about as far as the staffing continuity, right, and financial management.
Right.
A lot of times nonprofits are challenged with staff turnover. And particularly when you experience staff turnover in the financial arena, it can be very devastating. If you've had someone in an internal role long term and then they leave, oftentimes we see clients that come to us in those situations and like a lot of knowledge went out the door and we're having to really help them a lot reconstructing things. For example, do you have your restricted donor, the supporting documentation for your restricted grant here, that kind of thing? Like, do you have your prior audits? Do we have the notes from those? Just there's a lot of knowledge that can walk out the door. And so Indinero really, I think in my mind, fills a really valuable role in that aspect because we can provide that continuity over the course of years where if someone leaves, you have someone in place who knows what's going on, who can help either onboard new staff or take on more of the role that your internal staff person was handling, that kind of thing. Develop relationships with your auditors. Sit in on meetings with grant funders and audits related to those, that kind of thing. So
And board
it's really
meetings and
invaluable.
yeah.
Yeah.
Yeah, and I think it's also important that for Indeniro, we are obviously heavily focused on partnership, and it's fun to partner with people that are committed to some of these extraordinary causes. It's incredibly rewarding, and I know both of you have had. We don't need to name names, but we've had some really and have some really fantastic partners in the nonprofit arena.
We absolutely do. And we get really excited about their successes. We
Yes.
like to be that small part of what they're doing. Vanessa, I thought you made a really good point earlier. Sometimes it's very hard to afford an in house financial person
Yeah.
as a full time position and not for profit. As somebody who's worked actually within a few not for profits, you're all wearing 15 hats
So
at
many
any
hats.
time.
Yes.
So it's very easy to let the financials get messy or have it not be one particular person's job and then it gets commingled, and that's a problem. So I love that what we can do is jump in and serve our not for profits and make sure everything is nice and clean and help them still wear their hats, all 15 of them within their buildings, and do what we do to keep it on the right track.
And they can
Right.
still focus on the high priority, which is almost always cash and being good stewards of other people's money. It's not to take away from the day to day or some of the other accounting issues that come up. That should still be a focus, but it's the things that candidly aren't value add for a CEO, for a director of a nonprofit to be focused on. Is my list of donor restricted grants or contributions right? That's not what they should be spending their time doing. They should get that information and then be able to act quickly in the best interest of the organization.
And I think too, another real big value add from Indeniro is our ad hoc ability to jump in when needed, right? So, okay, an audit, the annual audit's coming around. Great. We're here to support. We're here to work with the auditors and give them the information that they need and kind of be that go between so that the executive director isn't having to try and do it all themselves, right?
I've seen you jump in the car and do that and drive and just be there to make sure things are okay. And I know I've seen Kristen jump in as well. Yes, it is.
Yeah.
It's above and beyond. And I think it's very appreciated, but yeah, just having that resource that you can reach out to, incredibly helpful.
Right.
Kristen, are there minimums or floors or thresholds that we should be aware of for audit or any penalties that could arise?
Yes. So the threshold for an audit, if you are receiving federal funds, is currently $1 million. So if you hit that, any combination of federally accepted funds at that point that reaches that mark makes you absolutely necessary to have
At
an
1
audit.
million, you said?
Correct.
Okay. Okay.
And that doesn't
easier
have to be
get
from
to.
one particular donor or grant. That can be from any combination. But once you hit that mark, you are subject to audit.
Okay. Are there other similar requirements like that?
Well,
I'm
most
assuming it varies state to state, and again, we
correct.
become very knowledgeable depending on the state that they're in.
Indeed. So that's one of the first things that we do when we partner with a client is we make sure that we are compliant with both their state and their federal audit
Mhm.
needs. So it depends on where they're formed. And then also it depends on what grants they're taking. So it might not be federally required, but it might be required for the grants they're currently receiving funds from. And so it's incumbent upon us to make sure that we are staying within their grant restrictions.
Are there software packages that we see more often than others in the nonprofit space?
I see QuickBooks Online a lot. Well, even QuickBooks Desktop. Books Online has really evolved so much now that we do like to encourage clients, even nonprofit clients, to get on QuickBooks Online. We have the grant tracking capabilities in there, generally via classes, and it's a little more robust surrounding budgets and things like that, which also, almost every nonprofit needs to have a budget, has to go through the budgeting process every year,
And
that
how
kind
you
of thing.
track your actual spend is, again, a little bit different. And it's important that you're tracking it correctly and also against that budget. Kristen, do you have an example of a situation where you have been able to advise a nonprofit in a way that benefited them in terms of their ability to get these donations?
I do actually. recently I was able to see that our one of our clients was partnering with another not-for-profit because of some lacking capabilities that they had internally. But we were able to adjust a few small details that allowed them to, as opposed to passing the grant through another partner, process it themselves. And instead of taking only 20% of the available donation, now they're able to take the full donation.
And that's a material impact for them.
Correct.
That's fantastic. And we're creating these partnerships in that not-for-profit ecosystem of our clients. Kristen, you had mentioned that I think you told me at one point there are some thresholds that can trigger an audit or have tax implications. Are there any we should be aware of?
Indeed, as of 2024, if you were accepting any federal funds up to $750,000, then you are subject to an audit. And that doesn't have to be from one grant, that can be from any compilation of grants that come that are federally funded. Once you hit that mark, then you are subject to audit. That figure changes or can change annually. So we always stay up to date with those compliance numbers, and we let our clients know that that's something they need to be preparing for, budgeting for the audit, and getting ready for in terms of having the documentation ready.
Yeah, and we work closely with our tax team that can prepare your 990. In fact, we have a really outstanding not-for-profit tax director who would also keep us up to date on anything like that that might change or be important.
Absolutely. We have some very strong people who are just integral to making sure that that's a smooth process.